Hi, let's talk about ReShape Lifesciences. It's a medical device company that provides products and services that manages and treat obesity and metabolic diseases in the United States, Australia, Europe, and internationally. The market cap is not so big, 34 million, and it has currently good potential. So revenue is forecasted to grow over 32% per year. There's a bunch of risk, has less than 1 year of cash runaway, highly volatile share price, currently unprofitable, and shareholders have been diluted in the past year, and also I think does not have meaningful market cap, which is 35 million, but instead they have huge upside, currently over 140%, and in good scenarios, it's actually the same as the 12-month forecast. And also the market watch has similar stock price target. The latest share price went up, and they had this peak as usually in Medicare and the biotechnology companies in mid-January, mid-February. They had the price went, how much it went? So it went in the day highest point were $35 per share. The volumes at that point were around 150 million. So currently this is actually the raising volume, so 30 millions, and they have had last week 34 million. So it's volatile liquid stock, which shows like short term this is decreasing based on this peak, but of course I think from this levels that it had last year. So we see around how much close 2.3, 2.7, and currently it's 5.6. So long term, I think this is once again raising once again. Market performance, 1 year return, almost 70%. Of course, being in that frame industry in the market, long term price volatility considered as highest. And industry itself is less volatile than the market volatility. And if you see here closely, 3-year return minus 100%, 5-year return minus 100%. So this is actually, usually we see like 1 year frame. If we open up 5-year frame, we see more of the decreasing what happened. So yeah, this is 5-year return minus 98%. And on the max side, so actually they entered stock market in the 2016. So this is actually one of the things that I don't recommend if you are investing in only one stock from your portfolio, and owning one stock, highly volatile stock, could make some of the damage. So be careful, try to diversify your portfolio, and if your risk-taking abilities does not allow you to have these kind of stocks, it's always better to buy a low-cost fund. Anyway, let's continue. So valuation side, as I said, Simple Wall Street does not have any price targets, but TipRanks has 13.75. And this is not the actual number that it must have been. So the analyst set it, and within like half year, if the stock price would be around those numbers, some of the analysts can decrease the price target. So within, seeing here 144% upside, actually within half a year we can see here $6 per share, for example. That would be maybe accurate price target. But anyway, future growth for the company forecasted annually 39%, which is good. Basically, they have not so good on the earnings side. They are losing minus 70 million, but they managed to increase or decrease the losses that they had to have to minus 22 million. But anyway, the revenue is raising, and it's forecasted to raising, so That's good. We'll check that later on the simple safe dividends. Earnings per share growth is forecasted as well as to grow, but it's not forecasted within 3 years that they not become profitable based on analyst forecast. Past performance, so historical annual earning growth decreased by 13%. So actually it's meaning pretty much this kind of movements that we see here. And currently the company is unprofitable. On the financial health side, we see pretty much rally. So they had negative shareholder equity. They managed to increase that. They have minimum of the cash, so less than 1 million. Equity, yeah, actually debt to equity ratio is over 104%, which is not so good for the company, but if they manage to increase for example level of cash, that will be good. So equity 12 million, debt 13 million. Balance sheet looks like this. So there's a debt that is waiting. On the dividend side, they are not paying dividends and insider transactions. So what we see here, yeah, so actually there's on both another on the both sides, there's a company that is buying not so significant kind of amount of the valuation, but anyway, there's a company and individual that have been buying. Ownership breakdown, we see here general public holding mostly 90%, institutions 9%, insiders 0.0. Yeah, actually on the top shareholders we see some of the companies hugely adding this to their portfolio. Only Victory Capital Management decreased by 3%, and District 2 Capital 1,000 and over 2,000 the bigger capital fund. And yeah, so let's check it out. The simple safe dividends. Shares outstanding keep significantly increasing, and total sales are increased as well, but based on, for example, year of 2019, it's decreased by 25%. Anyway, this is volatile share price that could be leading to losing some money. So be careful. Investing.com summary the stock for long-term investors as a strong sell. Thanks for watching this video. Subscribe to the channel, like the video, and see you in the future one.